Hey guys, welcome back to Sharks Academy, and in today's video I want to share with you the weekly market analysis moving forward into next week. So first of all, we have the dollar index, and currently we mark this out. You can see that we have a breakout structure here, which means that we are going to go bullish over here, right? So where is the protected low? It will be at this level because this low grabs liquidity, break market structure, leaving behind several demand areas for us to get involved. So you can argue that you can use this entire demand area like this. And this is good enough, right? This can be your demand zone. And what happens when prices taps into this level? You expect some sort of reaction. It doesn't have to be a reversal to tap into this level of liquidity highs. Yes, prices should travel into liquidity highs over here. But what we want you to know is that we want to see a bounce at this level. This gives us a bias that DXY, that US dollar, is bullish at this level, which means to say that you want to buy USD and sell the counterparty, right? So with this in mind, we are still trading towards this level. We are still bullish towards USD. And of course, you do not just blindly fire and buy USD pairs, right? You will expect some sort of a pullback on the lower time frame, like this, and like this. So all of these pullbacks are basically sell buyers for USD, and this affects you if you are scalping in the market, if you are trading on the 15 minutes, the 5 or the 1 minute for dollar pairs, okay? So now let's go to Aussie dollar. So now Aussie dollar, we have this supply zone. You can see prices currently tap into this level. We are looking for a sell side move. Why? Because we have a break off market structure towards the downside. We expected prices to make its way towards supply zones here, and perhaps some sort of a supply inside of here as well. So now prices are at our POI. We're at a supply zone. Okay, we grab liquidity over here. You can see clearly, right? Even spike this high. Maybe it's due to news movement whatsoever, right? So now we are bearish. And if we are bearish, we are going to be bearish into this demand zone. Okay, so this demand zone, again, grabs liquidity, breakout of structure over here, right? Prices gives us this movement. Change of character, can you see? This is substructure, right? This is internal breakout structure. The real change of character happens here, and prices wicked out, all right? So now, I am still sell-side bias, of course, right? Ultimately, understanding that the entire framework comes from this. And this demand would be my first target, and I expect prices to run towards this level ultimately. So how do we position ourselves to catch a sell move? So now on the 4 hours time frame, all right? Okay, let's go down lower. On the 1 hour time frame, you can see prices clearly change in terms of market structure. Can you see this high and this low? So we have prices moving higher, creates a lower low, break structure, pulls back, right? Now break towards the downside as well. So we are going sell side, and where are we going to sell from? Here, potentially this week, right? And the other support or the other supply will be here. So this is the supply zone that I'm looking to sell from. Okay, I expect prices to potentially make its way higher into this supply while breaking down lower to grab the higher time frame liquidity areas like this. Okay, prices does not necessarily need to come back now, right? We expect prices to be mitigated in future, but it depends on how prices are playing out. Okay, this supply may not hold in the future when we see a bullish movement creating over here, right? Moving upside. So if we are starting to see a bullish delivery, this supply is going to give us a reaction. And if it fails to follow through, we expect move higher. Over here, we have the euro dollar. So the most traded pair, right, for most of you. So now when prices wicks out over here, both of these are wicks out. The question I get the most is, so now are we bullish, because is this a liquidity grab? Is this a break of structure? Right, whether it's wick break, body breaks, or whatsoever. So ask yourself this question: if you want to be a buyer, where are you going to position yourself to be a buyer? Are you going to buy here, right? Are you going to try to buy here, or perhaps over here now? Okay, so I hope that your answer is you're going to buy over here, right? You're going to buy at discounted levels, you're going to buy low. Doesn't matter whether it's wicked out or it's break of structure just yet, unless you're looking to buy over here on the 5 minutes or on the 15 or on 1 minute, right? So ultimately, we are trying to trade into this level to buy higher if this was a break of structure. Okay, So now we are looking to sell because we have equal highs here. We have a liquidity grab. So now, one of our students caught sells yesterday, right? Last night, this is a supply zone, right? We have a break of structure. Step number 1, we are bearish. Step number 2, we have a supply zone here, 15-minute supply zone. Step number 3, looking for a change of character on the 15-minute time frame. Highs, lows, high, break, structure, supply zone, and you get involved, and that's it, right? It's very simple. Okay, of course, understanding that the entire market context is bearish. So now we have bearish price delivery. Prices starts to deliver lower. We have a supply zone here. And this is how we're going to get involved using the 3-step process again. So we are moving right into Euro Pound. You can see clearly on the daily time frame we have this sweep. We have this break of market structure. Right? So this is the change of character because we have a low, a high, a low, a change of market structure. So if you want to see a real bullish move to occur, we want to see this movement over here. So ask yourself this question. Are you willing to take buys here, expecting a high low to form, which will then be followed through to take highs over here? Or do you want to wait, right, for this bullish move to occur? And if this happens, it's going to take a while, right? This is the daily time frame. We expect prices to deliver like this if it were to follow through. So now let's say majority of the traders will use this change of character to get involved in the market already. Mark out this daily zone and refine this area, right? So the problem with fighting or using this entire demand is that you're going to have a lot of false signals, right? If you were to play with the lower time frame, of course, as I always mention, you're going to get wicked out or stopped out many times before it actually moves higher. So one way, if you do not want to refine this area, is to use a relatively high time frame, right? You want to use like the 1 hour time frame onto this daily demand because you seldom see 1 hour fake outs, right? And even if it happens, maybe once or twice, and that's it. If you were to use the 15 minutes or the 5 minutes, you can get stopped out 5, 6, 7, 8 times, right? It's very easy to do that. So either you use the entire demand zone or you go down to lower time frame to refine this area. And you can see clearly you have this refined area over here. Or maybe if you go down even lower on the 15 minutes time frame, you can see that all you need to do is to work with this area over here. And if you go down even lower, look for areas beneath. You can even use this. You can see 5 minutes refined area. All right, I'm fine with the 15 minutes. Good for me. And yeah, pretty much that's it, right? So nothing over here as well. Okay. So ultimately, this is the area I'm looking for. So leave the entire daily demand over there because you understand that prices can easily come back down over here, smash through your 15 minutes demand, but still make a move higher because the entire daily demand is in play. The problem with trying to refine these demand zones into just one POI like this is that what happens if prices were to break through and then you thought that this is going bearish, right? Because you forgot for a moment that this daily demand is still in play. Prices can easily sweep because structure, demand to go higher. And you are waiting for your POI. Didn't give you an entry at all. So this is what it is on the Euro Pound. And I'm still expecting prices to move down. So can we catch sells? Of course, right? If we see a pullback, we are definitely going to catch sells. And let's say if prices were to move back up now, right? Because you follow the movement on the 4 hours, right? Highs, lows, high, change of character, lower high. Again, break of market structure, right? We have supply zones here, we have supply zones here. Both of these areas are available for sales. You want to use the 3-step process. As prices comes back up, shift in market structure, pull back, get involved. Understanding the fact that this can get ran because this is liquidity or inducement into this supply on the higher end, right? We can see another 15M shift here to go lower. And then you can catch continuations, of course, to go lower into this demand area. So I'll be conservative with that, right? I will not trade into this demand exactly. If prices were to pull back from here, this would be my liquidity pool. All right, this will be my target. For pound dollar, nothing too surprising, right? We are always bearish. We have this big of market structure. We have this supply area. All right, prices eventually tap into this level, and we are looking to run this support area, or at least this low over here, right? So this low, for now, failed to create high, and therefore should be ran, right? We should target this demand or this low. So now let's go down to the lower time frame. On the 4 hours time frame, you can see clearly prices starts to deliver bearishly ever since we broke this level, because this is the low. They created the high, and now started to deliver bearishly, eventually taking out this low, right? Taps in, broke down. So it's always bearish. Okay. So now you can argue that yes, prices now creates this first sign that change out of character. This is a demand that is valid for prices to eventually come down to go higher, right? Because we have a change of character here. If this demand were to hold, right? If this demand were to follow through, this should be taken out. So now this leaves us an opportunity to catch sells into this buy to go higher. So now we are definitely catching sells. We are not going to buy here. So let me just remove this. And now prices are playing with this supply area over here. All right, this is a pin bar. Let me just remove all of these drawings. Right, this is a 4 hours pin bar. Okay, we sweep. The low that created the high came from here. So now if you are bearish, we want to see a break of structure here. Okay, so this is how we caught some sells, right? Because you understand that prices tap into this level. So we did have a change of character here. We broke market structure. We tried to sell here and here, and we caught some sells. And prices eventually ran up, grabs liquidity. This is the low that grabs liquidity. So I'm looking for this low to be broken before catching sells. All right, this is a liquidity area. We are looking for a breakdown and then catch sells by means of supply zone over here. We eventually go lower into some sort of demand here, because yes, change of character potentially going higher, but if this fails, you can trade the supply flip. All right, ultimately we are trying to trade into this PY over here. Okay, this is a retail support, and ultimately we are bearish. Okay, New Zealand dollar definitely bearish over here. Break of structure. This is the supply zone. So this is a huge supply zone. You can actually use the refinement. You want to be a seller on a sell here. Okay, this is the highest point. This sweeps liquidity. This is the best point of interest, of course. So if you go down to the lower time frame, definitely looking for sells here as well. Not as strong. Doesn't mean that you cannot earn money, right? Because you do not take trades in this manner. Shift, sell, run it down towards the lowest point. You do not trade it like that, right? You're always going to have a lower time frame confirmation, trade the inner range, right? You can earn money through that. So just a simple example, we're always going to do the 3-step process, right, on a 15 minutes time frame over here. So now, yes, ultimately this is your target, right? Prices broke structure, liquidity area. We are trying to trade into this level, but this doesn't mean that we are always going to have our target at this area, right? We're going to take partials along the way. So now we go down to the 15 minutes time frame. Okay, and what we're going to do is we're going to look for a 15 minutes change of character, pull back, catch sells into this level. This is easily 1:1.5, 1:2. Okay, or it depends on what are you going to do or how you're going to trade this. Okay, you can actually put your stop loss above the demand, the supply area, and now this becomes a 1:3. You're going to take partials. You're going to take 50%, you're going to take 80%, and let the rest run potentially towards this level for 1:36 or whatsoever, right? This is how you're going to trade. You're not going to hold your trade every single time to let it run towards these liquidity lows. Okay, so this can happen several ways. You can see so many 15-minute shift and still make money off it, right? So let's say prices failed to break through. Okay, prices grabs this and then it's move higher and then shifts again, and then you sell here and it makes a run down. It grabs liquidity, taps into demand area, makes a move higher. Can you see that all of this with proper trade management, you can still earn money from the markets, right? Because you understand where is your range. When you use your 15 minutes change of character, the low is going to be your target, right? It's going to be your take profit number 1. Okay, and then of course you can look left and you can look for target number 2, 3, 4, 5, 6, doesn't matter. Okay, this is how you scale in. So prices can easily now fake you out. You get involved here. They didn't even grab liquidity lows. Taps into some sort of demand over here and starts to run higher. Understanding that you have a higher area of supply over here. And what it did over here is just to create more liquidity. Can you see this at the end of the day becomes trend line, right? On the 4 hours, perhaps it's just bullish movement. Okay, but on the 15 minutes time frame, you have some sort of a change of character allowing you to get involved in the trade. All right, all of this is just building more liquidity into this supply to eventually shift. And this may be the one that's going to run towards the low. Okay, so the extreme points are the strong ones, right? Because this is the origin of the move. This sweeps all the liquidity before breaking down on structural. And you can decide whether you want to get involved here or here. Okay, so of course, there are times where prices indeed taps into this supply, starts to run down, grab liquidity. Okay, this happens, all right? And you're still waiting over here when prices broke structure, grabs liquidity. So now when prices comes back up, finally, it taps into your POI. You have been waiting for this level, but can you see this range has met its target? You are still waiting for a supply zone over here, and when it shifts, you sold here, all right, you sold here, starts to run up. And you fail to realize that this actually taps into a demand area somewhere over here, perhaps, or maybe here. Okay. So how am I looking to get involved in the dollar Canadian? So right now, prices are somewhat sideways, right? Not very nice, not very clean. So you can either wait for prices to break through this level and then trade off the demand here, because this low sweeps liquidity. So of course, temporarily, I am bullish, okay? But this is trading sideways. You can see that you are in the middle of nowhere. You understand that we have a demand area here. Let prices tell you what you want to do. For me now, hope for a break of structure here, right? Sweeps, breakdown of market structure, demand area. Use the 3-step process here to get involved. Let's say prices starts to break down, all right? Then you expect a move into this demand, which means to say you can catch sells here, go lower into this demand, and see whether it accumulates over here to go higher. So now for USDCHF, can you see that on the daily time frame we are actually moving sideways, right? So on the 1 hour time frame, you can see clearly prices sweep, change of character, supply zone. Okay, these two are supply areas. Taps in, change character, you can see, right? So ultimately, the real change of character starts from here because this is the high. Then this is the low. Then this is the high. So this should be the real change of character to go lower. So what I did over here was to use a minor structure, right? Prices broke a minor structure with context, came back up into this supply zone. Are you valid for sales? Definitely. Go down to the lower time frame. Can you see that you have a change character? So how we trade over here, we do not just place sell limit at this level, stop loss above this level, right? With this minor break of structure like this, right? You understand that, okay, now prices gives me another shift in market structure, and this is how you actually catch sells. This is a very nice movement. Change character, pull back, right? Can you see how prices pull back versus this break of market structure? It starts to deliver like this, right? Creating what? Liquidity beneath all of the lows. Understanding that all of these are internal structure, okay? Taps into this level, change of character, supply area, got involved, okay? This could have easily been a 1:13, right? And then starts to deliver lower. So this is where you may have gotten caught, right? We sold, taps in, maybe make some money over here, okay? This came up to weak everything. So does it tap into this demand? This taps into a supply, right? I think mitigated perfectly. This low is 0.92761 and this high is 0.92762. So yes, this taps into the supply, then make a run lower. Okay, so we are still bearish. We are going to be bearish into this area over here. So dollar yen, we are still bullish. Okay, you can see this is a break of market structure, liquidity high, fail to grab it, and this in turn creates a trendline liquidity. Okay, we're going to expect sellers from here. We're going to look for buys. Why? Because prices taps to demand, right? High, broke structure, taps back into this demand zone, liquidates this area, liquidates the low, change character, and continue to move higher. So we are bullish, and we can be bullish here. Go down to the lower time frame. Let me just remove all of these markings. This is a 4 hours demand area, okay, that is valid for you to catch buys because the larger time frame is still bullish. Can you see that if you follow this movement? this is still bullish. And this demand over here can eventually run this high. Okay. This demand over here is still a valid POI because this is the low that ultimately creates the high. So all of these are just valid demand areas for you to get involved in the market. Okay, and this is not bearish until prices decides to break this low, because this is the low that creates the high. We are not going to be bearish until prices broke this level. Expect a run up before going lower. Okay, so we can have bearish delivery inside of here on the lower time frame, like the 4 hours or the 1 hour. But you understand that all of these are still substructure. Okay, this is the bullish leg. This is internal bearish leg. Demand move higher. So let me just share some of the discussion we have in our student group. We understand that we are still bearish, okay, with this leg over here. All right, we just broke this. We have a supply here. So of course, this supply is on the lower time frame. I think this was 4 or 1 hour. Right. Okay, so this is a 4 hour supply area. Can you see over here? Right, 4 hour supply area. This high, right, liquidity, okay, taps in. So we didn't get involved here, right? So let's say you go down to the lower time frame, the 15 minutes time frame, and you can't see any way to get involved. Doesn't matter, okay? Prices starts to give us a change of character on the 1 hour over here, right? So this is the change of character. This is the first time prices tells us it wants to go lower. Okay, so then again, you can ask yourself, you want to take a trade over here, anticipate the higher low by means of another confirmation, right? You want to see another shift to support your buyers that this is the higher low to build a lower low. And then now you can trade off this bearish movement. Okay, otherwise, wait for the bearish movement to appear, right? If you're not confident, you want to wait for this low or maybe this low, high, low, then get involved here. This is fine as well, right? But what you need to understand is that prices can easily make a move lower, a high, a low, and you want to trade over here, right? And prices just smash through, taps into higher areas of supply using this as inducement, go lower. This is perfectly fine as well. So whatever you do, understand that it has to be systematic, right? You understand that this area over here, you are selling low of the range. This is the entire break of structure. You trying to sell here is selling low, all right? This is just one of the examples. So now, when prices broke structure here, right, give us a change of character, this is a valid supply area, of course. Go down to the lower time frame. What do we have? This is the high, right? Can you see this sweep? High, low, high, broke, out of market structure. Both of these are supply areas, okay? I think this is an entry on the 5 or 1 minute. Okay, so this is a 3-minute supply. Can you see this over here? Sell limit, stop loss above this. So at this point of time, I have 2 sell limit orders. I have one over here. Okay, with my stop loss above this high. And one over here, just like what it did over here. Okay, so there are many ways you can get involved in this market. First, understanding that you can place your sell, stop loss here, sell, stop loss here, or cover the entire range. You can sell over here, stop loss above this high. This is valid as well, but of course you're sacrificing RR, right? You're sacrificing risk to reward because you want to get involved only once. Not many traders are, psychologically sane to actually take trades over here, get stopped out, and get an entry over here again. Okay, what happens when you have more than 2 supplies? You have another supply zone here. Are you going to place sell limit here, stop loss here, sell limit here, stop loss here, sell limit here, stop loss here? Or are you going to place a sell limit here, stop loss above the entire range? Or are you going to eliminate this lowest point of supply and just get involved here, right? All of these are up to you, all right? Whichever that suits you, whichever that is comfortable for you. So this is where you actually take another step, right? Let's say you are going down to the 1 minute time frame to look for step number 4. You want to get the best RR, right? You want to look for a 1 minute shift in structure. And when you do this, right, we indeed have a shift in market structure. And at this point of time, you can see you did not get involved because you are potentially waiting for a supply here, which never comes back and prices starts to deliver lower. So now the question you want to ask yourself is, how do you catch continuations? So let me just remove all this. Okay, how do you catch continuations? This high, low, high, broke structure. the entire block, the entire order block comes from here. Because this is the buy to sell move. It started from here. What you're doing over here are refined areas. So prices indeed came back to mitigate, then broke structure, right? So now when this happens, you see a mitigation play, you see a break of market structure, you are able to go for sells because you have the bearish order flow created. All right. Mitigation over here, we have a sweep, break structure, supply, get involved. This is one of the ways you can get involved. And then of course, you're going to expect another move, supply zone. Can you see order flow, right? Mitigation, mitigation, sweep, break off market structure. What I'm going to do next? If prices were to break down, I'm going to place a sell limit here. All right. Stop loss above this high and see the run through. But of course, this move happened and I didn't catch the entire move. Okay, it's such a waste, right? But that is my trading plan. I didn't have plans to actually hold. I didn't expect this drop initially, right? I had my sell limit here, and my stop loss above this high, like this, and then I was targeting for this area. So this is a 1:11, all right? And of course, prices starts to run so low. This is a 1:55. You see? So you can say that I missed the entire 1:55 move, but I didn't expect this to run before the weekend's close. All right. So this is just one of the things that happens. All right. We are not going to always expect this sort of a drop, and too bad. Okay. So now what happens next? This entire area is going to get filled. Right. We're going to see an imbalance fill. We're going to see a move up eventually into some sort of supply here, and then I'm going to catch sells again. So we'll end it off with a Bitcoin analysis, and based on this, you can see that we have a break of structure towards the upside. We have this as our liquidity point, but can you see prices high, low, high, change factor? So now instead of targeting this high, we are going to look to target this area over here because there will be traders who are looking to sell here because we grab liquidity, we made a low, we broke this area again, right? We grab liquidity again, we now deliver lower. So the truth is that prices can come back up, and once it fails to break through this level, this demand is going to fail. Okay, we're going to see the shift to go lower, and this means that Bitcoin is going to go lower, of course, right? But look at this demand zone. Prices still broke structure. This demand zone is still valid for buys, and now we got a very nice bounce. Go down to the daily time frame. So look at what happened. We have a low, a high, a low. We broke this level. If I'm looking to be a buyer based on technical analysis for Bitcoin, I'm going to buy here. Okay, I'm going to hold my trade. I'm going to look for a run into these highs, into this resistance area, this trend line, ultimately into this level, and take profit at the 60,000 level. Okay, so understand that again, this is not financial advice. Please only trade this if you understand what I'm doing. Okay, and for those who are interested in our methodology, check out the link description below, join our mentorship program. We now have a Chinese New Year promotion. We are going to end this promotion in about 3 days. All right, 15th of February, this is where it closes. So book your slots now, reserve your slots now, text me, give me a direct message. All right, otherwise, I'll see you in the next video.